Tuesday, the recent fall of some banks has caused some anxiety from investors and also people who have their money in banks. But whether you have a savings account or you have a 401k that invests in banks, should you be taking action to protect your money? Joining us with Financial Perspective is Stewart Welch from the Welch Group. Good to see you this morning.
Hey, Mike.
We're really talking about two different things here. First of all, let's talk about people who have their money in checkings and savings accounts in their banks.
Yeah, so I think, I'm very comfortable with those folks. So,
Okay.
The FDIC insures $250,000. If you're a couple, you can do an account in each name and then a joint account and insure $1 million. Not many people are going to have more than that. I think beyond that, if you have business accounts, the FDIC has at least intimated that they're not going to let these banks fail. And they're working on a plan to perhaps have higher limits for business accounts. They're watching this very closely.
Meanwhile, if you're an investor or you have bonds, what should you be thinking about?
Yes, so that's the second story. The regional bank index is down about 25% since the Silicon Valley bank failure. I think there's probably more of that to come. But the banks will get out of this. But I think if you're already invested in bank stocks, you may have a long wait. If you're not invested in bank stocks, you might start taking a peek.
Okay, all right, take that note. And also, I know you've been watching very closely what's going on in Washington with the, could the country default by June 1st if we don't raise the debt ceiling? What about the potential impact of that? What are you watching?
Yeah, so I think the first thing is we've seen this story, this is like the 10th chapter or 20th chapter. It's Republicans, Democrats, it happens all the time. My best guess is that they will come in and meet their obligations. What's frustrating is Congress is the one that passed, we're going to pass these debts, and now they're saying we're not going to pay them. That doesn't make sense to me, but I think it'll come together and we won't face any of those problems.
But just speaking hypothetically, how catastrophic would it be if we did default?
Incredible. It'd be incredibly catastrophic. I think on our credit rating around the world, our credibility around the world, it would have a big negative economic impact. It would be a very bad thing, so I don't think it's going to happen at all.
Yeah, I don't think either party wants that on their mark. All right, that is Stewart Welch from the Welch Group. We always appreciate it. Thank you.
Thanks, Mike.
All right, we'll take a break.